Dear friends, welcome to Weekly View on Markets. Markets continue to consolidate during this week. Nifty and Bank Nifty ended in the green, while mid cap and small cap indices ended in the red. Markets were subdued at the start of the week but staged a rally on Friday. The whole week was a kind of consolidation. We see buying coming at lower levels. Sentiments due to global development play its part on the markets. US has attacked Iran directly at the weekend, and this will impact the markets on Monday. While Indian macroeconomic parameters remain resilient and good, external factors play spoil sport for Indian market. I am confident that markets will climb the wall of worries in the medium term and markets will go to higher levels. We will see improvement in earnings growth of the companies due to the RBI rate cuts and government push to the growth of the economy. While the valuations are rich and are on the higher side, the earnings growth will support the markets. Downside is protected by liquidity and FII inflows into the markets. Investors should not worry about day-to-day volatility. They should remain invested, and patience will pay in the long run. Nifty closed with at 25,112 with a gain of 393 points, that is 1.59%. Bank Nifty closed at 56,252 with a gain of 725 points, that is 1.31%. Mid cap and small cap indices lost around 0.5%. Mid cap index closed at 57,995. Small cap index closed at 18,194. India VIX is quite steady at around 13.67. So there is no major panic seen in the market as indicated by the India VIX, which is quite steady for past few weeks. There were equal number of sectors gaining and similarly equal number of sectors losing during this week. That is why it is a consolidation during the week. Infrastructure stocks gained about 1.77%. Private banks gained about 1.64%. Auto companies gained about 1.51%. Information technology, NBFCs, realty, consumer durables all gained 0.5 to 1%. Media sector lost around 2.97%. Pharma sector lost about 1.69%. Healthcare sector lost about 1.5%. PSU banks, metals, public sector companies all gained lost around 1%. Energy, commodity sectors lost around 0.5%. So overall, it was a kind of consolidation in the market with no major gains or no major losses for the entire week. Now let us look at technical charts. This is a daily chart of Nifty. As we can see, Nifty is trading in a range. This is the support line and the top line is the resistance line. Nifty has closed at the resistance line. Resistance is at around 25,000 to 25,100 and support is at 24,000. Whenever Nifty comes to 24,000 levels, we see buying coming in, and whenever it is hitting 25,000 to 25,100, selling. Ultimately, I feel that Nifty will break out on the higher side, but till the global geopolitical tensions ease, we may see market trading within this range. This is the daily chart of Nifty Midcap Index. Midcap Index has taken support at around 57,200 and we can see the last green candle on Friday. That means it is perfectly within this trading range, and this may continue in the coming week also. This is the daily chart of Nifty small cap index. Small cap index also has taken support at this support line at around 18,000 level, and it has closed at 18,194, and major resistance is there at around 19,000 levels. This is the chart of Bank Nifty index. Bank Nifty index has broken out above the resistance level of 56,200. It has closed at 56,252. Next week will be crucial for Bank Nifty. If Bank Nifty index manages to stage a further rally, that will also pull the markets and the Nifty index along with it. Out of all the indices, the Bank Nifty looks quite strong on the charts. Now let us look at some of the fundamental parameters of the economy and markets. Indian macroeconomic parameters continue to remain strong. RBI forex reserves has gone up by 2.2 billion US dollars for this week. It is at 698.9 billion US dollars. It is one of the highest levels of the forex reserves for Indian economy. High forex reserves shows that the economy is quite sound. RBI is in a position to manage any kind of crisis that is coming with good foreign exchange reserves. Forex rate is at 86.59 rupees per dollar. Dollar index is further lost. It is at 98.77. Dollar index from around 109 level has come down to 98.77. This shows that there is overall lower demand for dollars globally. And crude price is at 77.01 per barrel. When Israel attacked Iran in the previous week, it had sharply gone up by around 10%, but it has remained steady during this week at around 76 and 77 level. We will have to see now that US has directly attacked Iran yesterday night. What kind of impact it will have on the oil prices and the markets? We will have to see it on Monday. Gold is at 99,096 for 10 grams 24 carat. A sudden rise in the gold price due to the escalation in the war between Israel, Iran, and now US. FIIs have bought 8,709 crore in equity during this week. DIIs also bought 12,635 crore in equity during this week. So both FII and DI are supporting the market at lower levels, while the geopolitical situation globally remains highly volatile. It is affecting all global markets and our markets also. But the buying support at lower levels by institutional investors is also preventing from our markets to falling sharply. USA directly entered into war with Iran in support of Israel. This is the latest development yesterday night. Escalation continues. There has been no major impact on oil prices till now. It is quite steady between 76 and $77 per barrel. We'll have to wait and watch. IIP data for the month of May 25 has come at 5.9% growth. So this is better than expected. This is another good news for the Indian core sectors. The core sectors is doing well. The economy is doing well. That is what is the indication. given by the IIP data. Charts show that indices have bounced back from the support level. This is what we have just seen on the charts. Consolidation is likely to continue in the market. Global geopolitical events will sway the markets in the coming week. Mutual fund investors should remain invested. They will get good returns in the long term. They should not get worried about day-to-day volatility in the market. This is all for this week. If you like my video, please subscribe to my channel. You can share with your friends. You can ask your questions. We will meet again next week. Thank you.